Welcome to Vskills YouTube channel. In this video, you will learn about the top interview questions for Equity Research Analyst. So, let's get started. Question number 1. What is qualitative research? The answer is, qualitative research is by definition exploratory, and it is generally used when it is difficult to frame the problem or develop an approach to the problem. It is also used to go deeper into issues of interest and explore nuances related to the problem at hand. Qualitative equity research is a traditional approach largely driven by the analyst's experience and insights. It involves subjective judgment based on non-quantifiable information, such as management expertise, industry cycles, the strength of research and development and more. Question number 2. What do you understand by equity research in capital markets? The answer is, equity research is a discipline within the financial services industry. Equity research professionals are known as analysts, whose job is to discover, develop and communicate insights of a particular company from a neutral position to enable the investment community to benefit by investing in it. Typically, the research attempts to define at a particular moment the value, risk, and volatility of a security or stock to assist investors in deciding to buy, hold, sell or monitor. Question number 3. What are the segments of equity research? The answer is, the role of equity research is to estimate the value of companies, provide analyzed information to the market in a structured form, and determine what drives share prices and then make investment recommendations. Equity research can be differentiated into equity research by investment banks and major brokerage firms, equity research by independent equity research firms, fee-based equity research, promotional equity research. Question number 4. Explain the different types of research. The answer is, broadly there are two methods of research. Exploratory research. The researcher does not explicitly state hypotheses. The researcher conducts a study and examines data to generate hypotheses to be tested in future research. Quantitative research involves the collection and analysis of numerical data. Numbers and statistics are used to classify features of the data and to construct statistical models. Quantitative research can be explanatory or exploratory, although most quantitative research studies are designed to test hypotheses. Question number 5. What is the need for economic analysis in equity research? The answer is, in equity research, economic analysis involves an analysis of national and international economic conditions and different economic aggregates to determine the investment worthiness and timing of investment in a particular share or an industrial sector. Detailed and in-depth analyses of the indicators assist in predicting the expected shape of the economic trends and the growth in different sectors of the industry. Question number 6. Tell us a bit about investment analyst reports of equity research. The answer is, an advice on whether to buy or sell the securities of specific companies or industries is contained in the reports of the investment analyst. They are usually produced by research analysts employed by firms that may have an interest in selling securities. However, in understanding how investment professionals analyze an industry, they can provide a useful model to students and what data points they find of most interest. Question number 7. Describe the equity research structure. The answer is, equity research organizational chart is very flat. There are 3 levels: associate, analyst, and the head of equity research. For covering companies in a particular sector, each analyst present is responsible. While we illustrate only some of these sectors, in reality, there are many more sectors and subsectors, as an investment bank can have anywhere from 10 analysts, boutique investment bank, to as many as 60 analysts, big bulge brackets with international operations. Depending on how many companies he covers, a single analyst typically has 1 or 2 associates. Question number 8. In equity research, describe the structure of investment banking. The answer is, the industry groups and product groups usually organize the investment banking function. Industry groups are essential sectors, such as consumer products, industrial, financials, energy, and others. Product groups include functions like equity capital markets, debt capital markets and mergers and acquisitions and service companies in all sectors. The role of the analyst is of the lowest level. Question number 9. For an equity research analyst, which skills are needed? The answer is, it is necessary to possess higher analytical abilities. You need to have a strong understanding of accounts and financial fundamentals, as most of the time, what you are doing is crunching numbers. Apart from this, knowledge about global and local business is an added advantage. You should know about capital markets and their function. The equity analyst also needs to be a good communicator. Since all the financial analysis needs to be presented in the form of reports and/or case studies, strong writing skills is a must. Possessing correct judgment goes with the job of an equity researcher. Question number 10. What is a beta? The answer is, beta is a measure of market risk. Beta is primarily used in the capital asset pricing model to determine the cost of equity. Beta measures a stock's volatility of returns relative to an index. Therefore a beta of 1 has the same volatility of returns as the index, and a beta higher than 1 is more volatile. Question number 11. Why should we unlever beta? The answer is, beta is levered to reflect the debt of each company. But every organization's capital structure is different, and we want to look at how risky a company is regardless of the percentage of debt or equity it has. Now in order to get that, it is required to unlever beta each time. Therefore we look up the beta for a group of comparable companies and unlever each one. Then take the median of the set, and then the lever is based on the company's capital structure. Then we use this levered beta in the cost of equity calculation. Question number 12. Describe the typical research process. The answer is, typically, an analyst focuses on a specific company or industry segment, researches its economic performance, and documents it in the form of a report. The report is presented to the company management, who then decides how to improve the services. Question number 13. How do we perform financial evaluation of investments? The answer is, financial evaluation of a project is an analysis of a project for checking whether the project is profitable or not before taking the project in hand. We also review the project by investigating its cost, risk and return. If we have lots of alternatives projects, then we select the best project based on the financial evaluation. It includes structure analysis of the assets and liabilities, liquidity analysis, financial sustainability analysis, evaluation of financial performance, bankruptcy tests, Tafler's, Liss's, Altman's and Springate's models, credit analysis, Duran's credit scoring. Question number 14. What is capital budgeting and the methods used? The answer is, capital budgeting is the process by which the firm decides which long-term investments to make. Methods used in capital budgeting are net present value, internal rate of return, payback period, profitability index, equivalent annuity, real options analysis. Question number 15. What is the purpose of assessing the creditworthiness of a customer? The answer is, the main purpose of assessing the creditworthiness of a prospective customer is to assess whether he is worthy of granting credit or not. The basic factors which are considered to be critical in the credit evaluation of customers are character, customer's willingness to meet credit obligations; capacity, customer's ability to meet credit obligations out of operating cash flows; capital, customer's financial reserves; collateral, a pledged asset in case of default; conditions, general economic conditions. Question number 16. What are the lesser-known factors that can impact the stock going forward? The answer is, the analyst would like to know about every other factor that can impact the performance of the stock going forward. There are factors only the management of the company can throw light upon, which otherwise the analyst would miss out. The analyst can articulate the question and get information on such lesser-known facts. This could be anything ranging from economy, technology, sector, product or company-specific factors. Question number 17. What is your philosophy on mergers and acquisitions? The answer is, for a company, mergers and acquisitions is a crucial event. An equity analyst can ask the management about his views on mergers and acquisitions, with respect to the sector that the company belongs to, the capability of the execution team for mergers and acquisitions, its readiness for consolidation, its criterion to target companies, etc. The answers will help an analyst to deduce whether the company can hold its position in the market on its own or does it want to grow in an inorganic way. Question number 18. How do you plan to tackle the current wave of technology disruption? The answer is, technology disruption is one of the biggest truths today and companies have to prepare themselves for it. When analyzing a company prone to technology disruption, the management needs to be asked whether it is aware of these changes. Technology disruption has a short-term negative and long-term positive impact in most cases. The management should be able to answer how it is going to hedge itself against the near-term losses and capitalize the gains in future. The analyst also needs to judge how optimistic and well-prepared the company is to adopt new technologies. Question number 19. What does solvency implies? The answer is, solvency implies the ability of a business to pay back its short-term and long-term debts to its creditors. Question number 20, explain Gordon Growth Model. The answer is, Gordon Growth determines the intrinsic value of a stock, based on a future series of dividends that grow at a constant rate. Question number 21, what is the objective of the Baumol Model? The answer is, this model's objective is to balance the cost of conversion of securities to cash and the cost of idle cash balances that could have been invested in marketable securities. Question number 22, what is the purpose of equity research? The answer is, the purpose of equity research is to identify the intrinsic value of an asset or security, to provide a better insight over the fluctuations of the equity market, to aid in the investors in the process of achieving desired financial objectives. Question number 23, blue chips are issued by which type of companies? The answer is, blue chips are a type of stock, issued by large, well-established companies which are considered to be safe and in good financial shape. Question number 24, what is the purpose of the Miller Orr Model? The answer is that this model's objective is to determine the optimum cash balance level, which minimizes the cost of cash management. Question number 25, name some of the commonly used quantitative methods for sales forecasting? The answer is, these would typically include market research reports, expert focus groups and the Delphi method, most applicable when entering a new market where little data is readily available. Question number 26, how do you value a stock? The answer is, one of the most common valuation methods used for stock valuation is discounted cash flow valuation methods and relative valuation methods using comparable public companies and precedent transactions. Question number 27, brief about investment analyst reports of equity research? The answer is, the investment analyst reports provide advice on whether to buy or sell the securities of specific companies or industries. Investment analyst reports are produced by research analysts employed by firms with an interest in selling securities, but they can offer a useful model in understanding how investment professionals analyze an industry and what data points they find of interest. Question number 28, what are the skills required to become an equity research analyst? The answer is, some of the most crucial skills needed are: first, must possess higher analytical abilities. Second, must have a strong understanding of accounts and financial fundamentals. Third, must have knowledge about global and local businesses and added advantage. Fourth, must know about capital markets and how they function. Fifth, must be a good communicator. Sixth, must have strong writing skills since all financial analysis needs to be presented in the form of reports or case studies. Question number 29, what are the factors affecting adjustments in valuation? The answer is, the value of an ownership interest in a business enterprise may be subject to the adjustment of a valuation premium or discount for the following issues: ownership control, marketability. Question number 30, what are the tools used for the financial evaluation of a project? The answer is, some of the tools used for the financial evaluation of a project are: evaluate the cost of project, time value of investment in money, net present value, internal rate of return, payback period, risk evaluating. For more such videos, subscribe to our channel.